Welcome, I'm Ernie Goss. I'm McAllister Chair here at Creighton University in beautiful downtown Omaha, Nebraska. Here I am on the first business day to report on business conditions for November, the first business day of December for business conditions in November. And we're surveying supply managers in 9 states stretching from North Dakota, Minnesota, right down the middle of the country to Arkansas and Oklahoma in the south. What do these supply managers, and these are men and women that make purchasing decisions for their companies, so they're at the front end of the supply chain. So if they see things good now, we'll see things good later. Well, they didn't see things good. The overall reading for the month of November was up from 43.8 for October to 46.5 for November. Now that's still below growth neutral. As you know, growth neutral is 50, so this is the 5th straight month below growth neutral. And I'm sure a lot of you folks are saying, what the heck is going on? Everything looks good to us. We've had a presidential election. Everybody's on fire. Well, the economy in this part of the country, at least the manufacturing economy, is not on fire. And in fact, we're losing jobs in manufacturing, but non-manufacturing we're doing okay. And we're surveying manufacturing, remember that. Now I'm bringing up the chart here, and you'll see the U.S. number there in red, and that index will come out later on this morning for the month of November. You see there in beautiful Creighton blue, Mid-American, and it's up, but still well below the national. Now why below the national? Because agriculture, manufacturing, and energy are more important in this part of the country, and all 3 of those sectors not doing well. And as you know, oil prices still can't get above 50, at least they haven't recently. Okay, the job index. Oh boy, what can I say? Not good. It was 41 for November, 41.9. It's down from 44.4 for October. Just not getting any traction in jobs. A lot of it has to do with not enough qualified workers. A lot of these businesses can't take every Tom and Nancy that shows up at their company. They need skilled workers, whether it's truck drivers, whether it's welders, whether it's electricians. Over the last 12 months, we've lost, that's the 9-state region, 16,000 manufacturing jobs, minus 1.2%. Obviously not good. We gained 102,000 non-manufacturing jobs. That's a 0.8% or 80 basis points, 0.8%. That's still not that good. 102,000, we should be doing better than that. The nation is doing better than that. We asked them about wage gains for 2017. What are you going to get in your company for wage gains? 2.7%, that's still a little low. Should like to see that above 3%, still low. What's the biggest challenge? Well, no surprise here. About 40% say slow to negative economic growth. So that's a real problem for the area, and the areas, again, 9 state regions. Now we're talking about a lot to do with the rural areas and the manufacturing areas and the energy areas and the agricultural areas. Now, what to watch for next month? In other words, the numbers are good. What do I need to keep an eye on for December, in this month? Well, Congress and the President, now it's not in December, but you're going to hear a lot of talk about repatriation, taxing repatriated earnings. That's going to happen, And it's going to happen in the first quarter of 2017. You'll hear the talk between now and January the 20th when President-elect Trump comes on board. They're going to pass that. In other words, the tax rate is going to go from 35% to something like 15%. Those earnings are going to come forward to the U.S., come to the U.S., That's going to raise the value of the dollar, push down agricultural commodity prices, push down energy commodity prices, and have a little negative impact on manufacturing. Well, other than that, it's going to be pretty good. They're going to distribute those earnings to you and me and all other Americans and non-Americans in the form of dividends and other payments. The CPI for November, keep an eye on that. That comes out December the 15th. Very important. And what's going on there December the 15th in terms of inflation, rising inflation expectations, and we'll see that. Now the Fed meeting, the Fed Open Market Committee, that's the interest rate committee meeting, is on December the 14th. That's the day before the CPI, Consumer Price Index number, comes out. Listen to what Janet Yellen, head of the Federal Reserve, the president, says. And she says, telegraphs another rate hike, because they're going to raise rates in December. Now, the question is, what do they do in the first part of January? If she says, we're on track to raise rates some more, that would be very bearish for stocks. Now, what are the risks? The risks are, number one, a hawkish statement from the Fed on December the 14th. Hawkish meaning we're going to raise rates. Now, if you remember, in December of 2015, now only an economist would keep track of this, but they said 4 rate hikes in 2016. How many are we going to get in 2016? 1. So they said it, but they didn't do it. I think they're likely to say 2 or 3 in 2017. Are they going to do it? We'll have to wait and see. Another risk, rising short-term and long-term interest rates. Do you know that over since the election, we've had a 50 basis point increase in long-term interest rates? That's showing up in mortgage rates. 50 basis points, that's 0.5%. It's continuing to rise. Watch those rates. Short-term rates are likely to go up a bit as well. Keep an eye on the value of the dollar. Now, that's something most only economists look at, but as I said, when you repatriate those earnings, but that's not going to come until 2017, it's going to happen just like it did in 2005. The value of the dollar will increase, and that will tend to push down commodity prices, push down inflationary pressures. So those are the 3 risk factors. Those are things to keep an eye on. That's it, folks. Thanks for tuning in this month, first business day of the month here. I am Ernie Goss, professor of economics, McAllister Chair here at Creighton University, talking about the economy for November. Now we'll be releasing our December results on the first business day of January. Until we meet then, may your economic cup runneth over, and thank you.